we think that the second half of the year is still going to probably be pretty good. I don't know if we're going to have a double-digit gain in the second half of the year, but we think there's going to be positive returns. Economic growth is going to continue to be strong. And as we start to focus on 2022, there's still going to be earnings gains, not the big ones off of the strong low, but there's still going to be earnings gains next year, and the market should be discounting that in the second half of this year.
I know we always like to find fancy schmancy reasons for why stocks go up. It's the Federal Reserve. It's this. I mean, look, I'm sure there's a lot of things. The reality to me is that you have half the number of companies as we did 20 years ago, about 30% fewer stocks in those companies due to buybacks, and $5 trillion sitting around the world. If you had to make the bull case, is that it? Is it just more money chasing fewer assets, or is it maybe something that is fancy schmancy?
Well, the fancy schmancy part is that what we haven't seen is the loan growth in the financial system. And we think that what people have underestimated is what will happen when banks are, where there's demand for loans from banks, and banks have the cash certainly to lend it. And so as that happens, and we see growth in the economy from that aspect, that could keep the economy going.
All right, let's talk more now about the economy. When we look at earnings estimates and all the stuff that drives valuations and markets, is there any sector better positioned than healthcare? I know we talk a lot about energy because it had a huge first half of the year, but any sector positioned better than healthcare right now?
Well, healthcare is certainly one of the better positioned sectors. It's not had the run up that other so-called value sectors have had, and we're starting to see the sustainability of the pipeline that's there. We think that, again, what's not really appreciated is that because of the fast pace of the development of the vaccines, that there might be a shortening of the timeline that it takes to get new drugs and new procedures approved. And that happens, then we have significantly underestimated the earnings power in the near term and the intermediate term for healthcare stocks. And so we think investors have to be playing in that sector.
Okay, playing the healthcare sector. Is there any sector other than healthcare that you think is still relatively fairly valued, Chuck? I'm looking across the board on my screens and I'm seeing sectors that are 20 times forward earnings, and while that's not spectacularly high, it certainly does not appear to be cheap. Of course, I don't know what the E in price to earnings ratio is going to look like. Maybe you do.
Well, now, I don't know for sure, but certainly that's what investors are going to be focused on. The PEs are probably not going to rise too much further. So take the financial sector, for example. Just as I was saying before, if loan growth starts to accelerate, then the E part of that will also increase, making the prices for financial stocks still reasonably priced. And again, we think this is a multi-year trend where value stocks are going to outperform growth stocks, but you've got to be in sectors and in companies that have strong balance sheets and can increase their dividends.
Shepard Smith here. Thanks for watching CNBC on YouTube.